This is my fifth video on the Wyckoff trading method, and this one highlights some of the things I was talking about in the video number 3, where I was talking about a pump and dump pattern. And if you haven't watched the first one, I really recommend that you start there because this is going to be a little bit confusing if you don't have the basics of the Wyckoff. Wyckoff. I sometimes use both terms. I don't know how to pronounce it, to be honest. Um, so let's get cracking. So basically, I saw this the 1st of May of this year. The last video was based off of a pattern back in 2018, but this one is really recent, actually. And this is one of those where I thought it was quite a good example of how to trade it and see it in advance, because you see here, I was expecting, this is how I posted it. I was waiting for the test. I was like, I put test question mark because that's what I want to confirm everything and start trading it, basically. You can trade the breakout of this, no problem, if you put a stop below the spring. But here I was waiting for a pump and dump pattern like I've talked in the video number 3. And this is exactly what happened. But what I want to show you is how I use multiple time frames to trigger my entries. So you see here we had the pump and dump. And then here it made a triangle that is opening up like a megaphone, basically, which indicates that it's overbought. And then it retraced all the way back. So let me just maximize this. So this is the megaphone I was talking about, and then it crashed down. And then if you would have just waited a bit to get some kind of pattern out of it, then you could have traced this triangle. Then there's the break, the test, and then that's where I started coming in. So in the grand scheme of things, this is very small. So you get the megaphone here, so the entry was somewhere around there. So it's still, the risk is very, very minimal if you place your stop at the bottom or even at the bottom of the spring, if you want to make sure you're not being taken out for no reason. And then from there, there was multiple points where it retraced and came back and retraced, and you had multiple opportunities to get in that trade, as we can see here a little bit bigger. So megaphone, it did the triangle over here, then did a pump, it retraced, did another pump, it retraced, another pump, it retraced. So if you're trading on a smaller time frame and you have a bigger picture of what's going on here, you can really take multiple trades on using just day trading time frames, basically intraday time frames, to make multiple pips. You can hold like some of your usually I scale in these, and I use a portion of my positions just for the day trading part, and the rest I just hold on to it until it reaches my 618 target. So you see here, this is where I got out of some of my day trading position. Even I think at this point I completely got out because I wanted to see if it was going to be an SOS, because this is a crucial point where sometimes it completely reverses and comes back down and takes out the spring, and then it reverses, and then it becomes a failed one, a failed Wyckoff accumulation phase, and then it's a short. So let me just go into a different horizon. So this is the same pattern here. What I want to illustrate here is this is a 4-hour chart. Earlier it was a 2-hour. Same pattern. So you get the pump and dump, and then you have the test. And the test, usually, if you trace a trend line at the bottom near the spring, and you connect the lows of this, you can clearly see the pump and dump and then the test. And this is a really good point to enter, and this is where it was it got all wiggly. And then here, from these two highs, we were able to determine the SOS zone like I was talking about. That's why I like to trace zones rather than just a single trend line, because it gives me an idea of where it's going to accumulate. And then as soon as you see that breakout here, we have a full candle completely on top of that accumulation phase, and it keeps going. And from there, you could have traced multiple points of entries, basically, because these are pennants that are a continuation pattern. Basically, you have one here, you have one there, and right now it reached a 382 of that. Let me just zoom out a bit. So you see I took the high of this and the low, and this is my 382, the 50%, and then the 618. So the max point at which I would completely stop trading the pattern is if price goes all the way to 618. But in between, every time it does a pump and then it retraces, I can use that to re-enter position on the retracements, and when it's pushing forward, then I can unload a little bit on day trading time frames. But I always try to keep a few positions open and then play with it intraday. But I have a really good understanding of what's going on, because I know what we're doing. We're in a Wyckoff accumulation phase. We're broke out of the SOS, so we're still going strong here. This is an uptrend. We're making higher highs and higher lows. So this is a great opportunity for me that I've been trading for 3 weeks now. So that's why I wanted to make this video, because I wanted to illustrate the pump and dump here with the test of the triangle, like I was talking about earlier in the third video. And then I wanted to talk about the pennants, the continuation patterns, the SOS zone, and then just keep on trading the breakouts. Basically right now it's expanding, so it means that it's probably, if ever it does something like this, for instance, then I would be a bit worried, because that's an exhaustion, so it might come back down before it goes back up. But in either case, I think this is a great point to start looking for a long. And if you're lucky, then it's going to go to the 50% and then bounce back and then go to the 618 and things like that. So that's it for this video, guys. I hope you liked the video. If you did, please just click that like button and subscribe to the channel if you haven't. Peace.